Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is the November 29th edition of Market Outlook. I'd like to wish everybody a happy Thanksgiving. Hope you're having a pleasant and restful weekend. So this video is going to be brief this week, a relatively quiet week, even with the downing of the Russian jet. So let's get into it. First thing to highlight here is IWM, the Russell 2000. As you can see, we put in a pretty good week, up over 2%, closing just under the 200-day moving average, which is this green line, comes in around 120.70. So a couple things to notice, of course, on this particular week, very, very light volume and one day off as well. But we are at a little bit of an overbought area here on the short-term RSI, something to be cognizant of. But we did clear the recent consolidation since the August sell-off. So if we can get above that 200-day moving average, we're going to move back into a accumulation mode. Right now, we're still in what we would call a stronger recovery mode, as the 50-day, this blue moving average line seems to be held intact and rising. So again, move above the 200-day moving average would be most helpful. Also interesting to note is the spiders. A lot of compression over the last couple of days, very narrow trading range, and we've also now seem to be pretty firmly above that 200-day moving average, which comes in at 206.60. So between that, the 10-day, and that spike low that occurred on the day that the Russian jet was down by Turkey, rather important. So let's keep an eye on, obviously, the IWM above that 200-day moving average, and on the downside, the SPY, the spider S&P 500, below the 200-day. Those are your two key pivotal points. Now let's take a look at some of the market internals here. As you can see, this sideways action, this upper chart here is the S&P, very, very narrow range. By the way, if we can get above that recent highs here, above that 210, just above that 210 level, could have enough power to get through and potentially test the all-time highs here as well. Meanwhile, on the internals, up-down volume, not very convincing. We did get a bit oversold here, generated a buy signal on that correction after the huge move up, right? So we had up-down volume hit that lower band or the lower level. The same thing with the more intermediate term based McClellan oscillator. That in itself generated a buy signal as well. And we did get up-down volume at the point where it got oversold and started to rally up. So again, all in all, contributed to this move to the upside. Now, we're running rich a little bit on the advanced declines. That's also confirmed by another indicator that we have, which is the number of stocks above the 10-day moving average. That hit about a number of about 375, which is marginally overbought. So starting to see a little bit of sign of being more on the overbought side, but not convincingly enough. Starting to get there, but still plenty more room on the upside. But overall, net, running a little bit richer than being oversold at this point after that correction down here and the move up and the sideways action. So overall, plenty of room to move either way, with it starting to get a little bit rich. Let's take a look at the volatility ratio. That is not it. That is something else. So hold on here. Okay, so going back here, sorry about that. Looking at the volatility ratio, you can see here above the 1.2 level here, a bit overbought. So right now, we did get a bit overbought on this recent rally, and it's now working its way off. So I would say sentiment at this point a little bit more on the negative side, although you really didn't get grossly overbought like we did earlier here in November, where even the moving averages moved above that 1.2 level. So as you can see, this level right here is 1.2. The red line is the actual ratio. The blue line there is the 5-day moving average. Now, what I like to see to really get a confirmed overbought is to get above that blue line here. And extremely overbought is up over here around the 1.25 level, 1.3. And certainly we're not running that rich. And we are backing off a bit. So I would say this is slightly more to the negative. So between sentiment and market internals, marginally negative, right? A little bit overbought on the market internals. Sentiment working itself off of that recent rally, but not hugely so. So plenty of room to move again on either side. Let's take a look at the calendar range on the spiders. Again, any move above the 6-month calendar range, which is just about 211 or so, and the 1 month, which would be, well, it'll be interesting to see where that's setting up. But in the next 2 days, we're going to have a new monthly calendar range, also something to watch as well. But we're sitting basically in the mid part of the 6-month and right in the middle of the 1-month calendar range. So rather neutral here on the calendar ranges. But seasonals going into December are very, very strong. Now, let's take a look at a couple of other things. Let's just take a look at gold. And this is interesting. With all the political backdrop, what happened? Gold basically crushed on Friday. So once war did not break out between Russia and Turkey or NATO, and things cooler heads seem to persist here, which is a good thing. Gold did sell off, but still plenty of tension there in the world. So that's interesting. Along this backdrop, deflationary pressures, gold definitely selling off, and a bunch of commodities also not doing as well with the prospect of global trade slowing down. And I know that there are certain embargoes on wheat exchanging between Russia and Turkey. So let's see how that plays out. But meanwhile, commodity prices definitely under pressure. And the normal alternative to investments is the move into gold when there's political tension, and that has not materialized. One last thing I'd like to cover is the pressure in China. Here's a chart of the FXI, the Chinese ETF. And as you can see, since the recovery high, markets have sold off just about 10%. But more importantly, on Friday, we broke down beneath the 50-day moving average, crushed the 10-day as well at the bottom of the Bollinger Band. And interestingly enough, that actually had decent volume on Friday, also almost matching the 50-day moving average of volume, which is pretty unusual. So with the further deterioration in China, the market has got hit pretty good. The other factor, of course, is a lot of the Chinese banking brokerage stocks under pressure, some of its key executives in jail or in for questioning and incommunicado. Not exactly a open system there, and definitely causing some additional pressure because all of the machinations of the Chinese authorities being put in play here, and still markets under pressure. That definitely had an effect on commodity prices as well. So that's it for now. Remember, the seasonals are pretty strong, and as we go into year end. Thanks. Have a great rest of the weekend. See you next week.